minus $13,079. That's the trading result from our commodity and futures trading according to COT data and our extreme weather analysis in week 14. Welcome to Insider Week. In this video, I'm going to show to you our trades of this week and the corresponding results. We are applying 3 strategies. In our first COT strategy, we use buy and sell signals that we derive from the analysis of the COT report, which is published each and every week. This report is for free, and here we get our signals from. In this first strategy, we started into the week with one open position, namely 12 long contracts in live cattle. At the end of this week, we are long 7 contracts in cotton and long 5 contracts in coffee. Let's have a look at the trades of this week. First market is live cattle. In live cattle, we received a buy signal in the weekly trend direction. Although the seasonal trend is decreasing for the next period, we decided to enter this market. On the daily chart, you can see that the trend was indeed increasing. We used the correction that appeared to enter this market because we were convinced that the price is going to increase. However, after we've been triggered, you can see that the price has actually declined. On this chart, you can see a potential reason. Maybe the price is developing a range market. You can see that the price bounced back from the support level, and now we will see how the price is going to develop in the near future. For now, we will stay on the sideline. We will be patient and observe this market, and then we will see in what way price action will develop. Next market, cotton. In cotton, the COT data delivered a buy signal to us. This buy signal didn't receive confirmation from the seasonal trend, which was declining. Nevertheless, we decided to enter this market. On the daily chart, you can see that the price was actually increasing. We used the correction to take a position in this market. However, the trend continuation to the upside didn't happen. Instead, the price went to the downside, and now it is extremely close to our stop loss order, which means that the probability to get stopped out in this market is very high for the next week. Next market, sugar. In sugar, we received a buy signal in the weekly trend direction. As before, seasonal trend was not on our side. However, we decided to take a trade. On the daily chart, you can see that we were triggered in this market and the price developed as expected to the upside. The price continuation is what we wanted to see. On Friday, we decided to exit the trade at the end of the trading day. In this way, we could balance out the losses of this week. In this trade, we made a total profit of plus $12,936. Next market is the S&P 500. Here we received a buy signal in the weekly trend direction, which is a preferred setup for us. On the daily chart, we made a mistake. We unfortunately misinterpreted a potential entry pattern, which was actually not available. This was our fault, and the market gave us a penalty shortly afterwards that we were stopped out with a total loss of $10,800. This is a mistake. However, S&P 500 is still a very interesting market, and we are observing this market to try to find a re-entry. The next market is coffee, where we received a buy signal in the weekly trend direction as well. On the daily chart, we waited for the price to show a trend reversal first. After that impulse wave appeared, we used the correction to enter this market. On Friday, we entered this market and the price went into our direction, producing a bullish impulse bar. We are long 5 contracts in coffee and we wait for our target price to be reached. Now let's have a look at our second COT strategy, the so-called champion strategy. The champion strategy offers more trading possibilities and trades are conducted in a quicker way. In this week, we started into the week with an empty portfolio and we used the week to build up positions. At the end of this week, we currently have 4 open positions, namely in cotton, in the S&P 500 in mini, in lean hogs, and in coffee. As we used the week to build up positions, we didn't realize any gains in this strategy, such that our net profits are $0. Let's have a look at the individual trades. In cotton, the picture looks similar to the first COT strategy. We used the correction to enter this market and the price is currently close to our stop loss, such that it is quite probable that we get stopped out on Monday. In the S&P 500 E-mini, we took the correct entry pattern compared to the COT strategy. We are in the market and we expect the price to increase in the next week and follow the COT signal. In lean hogs, we used the correction to enter the market with our long trade. As you can see, the market showed us impulse waves to the upside and now it's developing in our COT signals direction. The coffee trade in the champion strategy is comparable to the coffee trade in the COT1 strategy. We were patient and we waited for the trend reversal to take place. And now we use the correction to participate in the trend continuation. The market showed us a great impulse bar to the upside, and we expect the price to increase furthermore in the next week. Now let's have a look on our weather trading account. We were stopped out in one of our positions, and that's why we have a net result of minus $2,135 this week. Here you can see that we were stopped out in lean hogs. This trade produced the loss of this week. On this chart, you can see that we used the next period's contract to take a re-entry in lean hogs. We are convinced of this market, and as you can see, the daily uptrend is intact. We also took a trade in coffee in the weather trading account. As a result, we have a coffee position in all three of our accounts. Our year-long experience has shown that these strategies that we are using are substituting and complementing each other such that the diversification effects make our equity curve as smooth as we want it. As a result, we adjusted our coffee positions in each strategy and we took only one contract in each strategy, such that we avoid to have cluster risk in all of our portfolios. In our fundamental analysis of the coffee market, one news stood out, and that is that Brazil gets its final wave of crucial Russian fertilizers. Afterwards, the supply from Russia is expected to be stopped. As Brazil is a key supplier of the world coffee market, these news confirm our long trades. Finally, as always, let's have a look at the Crb Index, which is the commodity price index. You can see that the commodity price index is currently in a range, and that's what we see in the individual markets of this week. Markets are either correcting or in a sideways market. So, in the aggregated commodity price index, we have no trend continuation to the upside yet. That's it from our side this week. What is your opinion about the coffee market? Is it on your watch list or are you already invested in it? Please write it in the comments. The highest rate of return comes from education. So take the chance to subscribe this channel to not miss out on future videos about commodity and futures trading. And if you find our expectancies to be valuable for your trading, then please give this video a like, such that we know that you're interested to see more of these videos. Thank you for your attention and we wish you all many successful trades for the next trading week. And as always, be aware of the risk, because risk management is the key to success in trading. See you all at the next trading report.